This is day trading ASMR. And today, I got another weekend analysis for you today. So, we do see that on this week's session, we did pull back and we did actually show that we weren't going to continue to the downside immediately after the bearish momentum that we had 2 weeks ago. So, if you want to be able to figure, or not 2 weeks ago, last week, technically 2 weeks ago, if you're looking at from Monday, because it wasn't last Monday, it was 2 Mondays ago. But regardless, if you want to be able to learn how to be able to handle that and prepare for this week's session and the upcoming Monday open, stay tuned in the video and I got some tips for you. So let's get into it. So today, guys, we're going to start off by looking at the weekly chart. So where are we? We have a bullish hammer-esque type of candle. Really, the wick is pretty minimal on both sides. So you can almost consider it to be like a naked bearish candle that is bullish. So very, very bullish in terms of the actual candle we got. Now, in terms of the position, so we are actually getting resistance here at the lows of this 2-week consolidation range with the bearish inverted body candles. Excuse me, somewhat. So basically what I would say there is that even though we had this bullish, we wouldn't consider this like too bullish overall due to the fact that we're getting resistance in an area that once was support on these candles above. So, and not on top of that, even though we're a little bit past the 50% retracement, I still would say that to a certain degree, when I look at this, there is potential for like a little bit of a 3-bar play. It's not perfect, but it's close enough. Like I would say that the 50% retracement is somewhere like around here. Let me see. Let me see here. So the 50%. Yeah, it's like close. It's how many dollars off is that? It's $3. Like a good amount of distance, but not like too crazy, you know. Where did it say we are on the chart though? Let me see. Hold on. It said that 100% retracement, a little bit above 61.8. So yeah, I mean you can't fully consider that a 3-bar play, but I'll give it. I'll say it is close enough, not perfect, but close enough. And overall, when we look at it from a Fibonacci perspective, from the highs to the lows, you'll see here that we're below the 50% retracement. And then if you look at it from from the highs to the lows, and you look at it from the lows to the highs, you'll see that we're also below the 50% retracement. So it's not perfect, like we're below the 38.2 or below the 61.8%, but overall, it still is more bearish than bullish, especially when you consider where we're at with resistance. So overall, I'll say that this is more of healthy pullback for potential setup, showing that we're going to go more to the downside. And again, overall context, this is bearish and bullish, and signs of confidence would be the fact that we're getting resistance here. So that's what I would say for that. Let's go over to the daily time frame chart and be as Trade Brigade says. I'm not trying to steal it from him. I'm just saying, I'm trying to sound smart. Let's be more granular here. But I hope he would see that. I'm a fanboy. Anyways, when we look at the day time frame chart from a trend perspective, technically we've made a fractal higher high and higher low. But in all honesty, I would say overall it's still more of like we haven't really formed a lower high yet. And in all honesty, I would say that we're still more in of a downtrend overall. You could technically count that as like a little uptrend, but not really, in my opinion. And then when we look at it from the Fibonacci retracement as well. Oh, I'm sorry, guys. I forgot to go over one last thing. When we look at the weekly volume profile, I'm so sorry, guys. When we look at the weekly volume profile, what else do we get? We do get this high volume node around 512, 513. What would you say is happening right there? We are closing below that, and it is acting as resistance. So just keep that in mind, guys, and understand that with the context with the 2-bar weekly consolidation range, the potential 3-bar play, the weekly volume profile acting as resistance, and on top of that, we haven't really made any substantial progress in the upside, as we're going to see in lower time frame charts. I would say it's more bearish than bullish. So let's get back to the day time frame chart. So right. Oh no. Whoops. dummy. So yeah, as I said, more of a bearish downtrend. And let me see here. And also, when you look, the only thing that is somewhat bullish right here is that you're seeing is that the positive weekly expected move and the negative weekly expected move are both higher. So that is something, but that's pretty minor, especially when we look at everything else. So again, same as the weekly, 50% retracement below. And if I did it the same on the from the lows to the highs, we'd also be below the 50% retracement as well. And overall, I would say, let me see here. So yeah, there haven't been really any new chart patterns that have been forming. So again, nothing to really take note of, as there's no real danger to the downtrend being violated. And overall context is more bearish than bullish. So let's go down again to an hourly chart, guys. And you can see here that this actually is showing more of higher highs, higher lows. But again, it's an hourly chart, lower time frame, so that is pretty normal. And we are getting resistance with the same thing, with the same things mentioned as the weekly and the daily. But when you get more granular, you'll see that the potential head and shoulders day time frame at 509.30 is acting as resistance, and so is this 510.50 level. So again, nothing really to take note there. And what I would say here, where bulls would start to take a little more control, anything above 509.08. Sorry, guys. Yeah. Uh, 509.08. This is where pretty much the lows of this is where the bear started to control. I would say this is an area, if we get prices sections above, that would be slightly more bullish and bearish. Anything in between $509.08, $499.19. Let me see. $499.19. Let me see. Right here, which would be the low of this right here, which is where bulls started to step up on that one session on this past Thursday. And overall, from a structural perspective, this is where we start to get a little bit past all of this consolidation in the middle. So I would say that would be the low of this like neutral-ish type of area. So anything between $509.08 and $499.19 is more neutral. Anything below $499.19 is where bears start to take more control again. But overall, they still are in control for the most part. And in terms of actual setups to look out for, so I personally am not going to be trading Monday, Tuesday, or Wednesday, because we do have Jerome Powell and the FOMC press conference happening this Wednesday. Because again, I'm very picky and I like to look for times and days where I filter out just to be more picky with my setups. 2 days before, 1 day before, and the day of any FOMC press conference or anything Jerome Powell gets involved with, I don't like to trade because it gets too volatile for me. And, I typically don't do well around those days. So I personally don't like to do it. But if I was to look for a setup, I would say I would be looking for look for a 15-minute higher time from higher low setup above $506.50 right here. Basically, because this is where the double top area. I don't want to get involved at the highs. I want to get a pullback area. So anything above here, which is a nearby area of support at the moment. Because again, this is a potential double top on the 1 hour chart, which is what we're on right now. So if we get support above here, that's like structurally showing that, okay, this is an area that used to be resistance, now it'll be support. So anything above here, and I would be targeting $508.20, and then $509.20 is the optimal target. And then for the bears, I would be looking for a setup below $509.30, and we would target $507.65 and $506.65. And then let's look at the market internals here. So for the market internals, I would see here that overall, my analysis with what I see is that basically new money buyers got involved at the lows. It was pretty insignificant Wednesday and Thursday, and slightly significant on Friday with somewhat of the bullish close on the Friday session. And it pretty much shows the same thing with both the dollar sign ADD and the tick as well. As you see here, this is Monday, Tuesday was more significant. Blah, blah, blah. Wednesday, Thursday, less significant, and slightly significant on Friday. What that signifies to me is not that new money buyers are getting involved due to the fact that they want to step up and they want to change this downtrend and bearish action that we're in. This is more of basically they're getting involved because sellers were more content with the fact that they were at the lows. Let me just go back to the daytime frame chart real quick just to uh, show you. So we're at the lows here, right? Sellers, especially over the weekend, since we didn't move lower, they were pretty content with the fact that, where they're at. So anybody that was held on for quite some time, especially with all this bearish shit that happened, they're pretty content and they want to sell off either all of their profits or part of their profits, especially if they're bigger time frame institutions. So they sell off. New money buyers get involved, right? But then as Wednesday and Thursday happened, it started to run out of steam. And Friday, they didn't have a whole lot of steam and they didn't have a close at the highs. So what that signifies to me is they got involved, not because they want to change the trend, because they wanted to dump part of their positions. Then they started to run out of steam and they continued to dump more of their position as well, just because, they were content with it. And at the moment, from the daytime frame chart, sellers aren't necessarily shaky, but they aren't as antsy to get involved at the lows here, if that makes sense, guys. And another thing that signifies that to me, let's look at the market profile. As you can see here, what did we get on the slightly significant Friday session? We got a long liquidation P day. And rules for something like this is that typically a bullish day like this doesn't last, because this isn't bulls getting involved to make progress. This is bulls getting involved to dump part of their profits. So I just wanted you to keep that in mind, and that's how I view the market. So that's my analysis for this week. You guys got any questions or concerns? Feel free to comment below, and I'll be more than happy to answer any questions, guys. I'm always happy to do this. Stay safe, stay green, stay smart, guys. See y'all there.